We all love dividends, and we certainly cannot lie. That's why in today's video, I'm going to be covering yet another income ETF. Now, these are the ETFs that offer gigantic dividend yields, and they pay out monthly rather than quarterly like many dividend stocks, which means you get a head start on that cash flowing and can start compounding that dividend income so much sooner. Income ETFs could also potentially make retirement dreams come sooner than later by actually giving supplemental income without having to wait decades. For example, the ETF that we're going to be talking about today has around a 10% yield. Let's imagine after a few years of investing, you have a $100,000 portfolio. That would mean you have $10,000 in dividends coming your way every year for the rest of your life, as long as you just hold on to the shares and as long as the fund keeps on doing what it's been doing. Let's say you can get your portfolio up to 200K or to 300K. Now that's an extra 20K or 30K every single year, which is now likely enough to be able to supplement some of your living expenses. So income ETFs, if used correctly, they can be so powerful to help us achieve financial independence. You don't want to miss this opportunity. Make sure you support this small time but growing YouTube channel by hitting that like button and subscribing so we can continue on that financial freedom journey together. Today we have XYLD. We can just pronounce this Xyld. Xyld is actually the brother of QYLD and RYLD, and they are all operated under Global X. Now these brothers of destruction, they do a covered call strategy, but unlike the other two ETFs, Xyld actually does the calls on the S&P 500 index. QYLD and RYLD do it on the NASDAQ Top 100 and the Russell 2000. So XYLD will actually cover the S&P 500. So they are just buying up the stocks that make up the index and then doing call options and then just collecting that juicy premium. Towards the end of this video, I will put Xyld on the side-by-side tracker so we can see all the characteristics of income ETFs to find out which might be the best option for you. Doing a covered calls options trade is a way to produce income during periods of high volatility, aka basically every day in the stock market these days. Now, a quick refresher on covered calls. Options trading is always done in 100 share increments. Essentially, we are saying that we will sell 100 shares of company X at X date for X amount called the strike price in exchange for the premium. In this case, it's always multiplied by 100. So in this example, we're saying we're going to sell 100 shares of Microsoft on August 20th, but we will only transfer ownership of those shares if the share price is above $290 at the end of August 20th. And in exchange for doing so, we get $633. So once that date comes along, and if the share price is above the strike price, the shares will be transferred over. If the share price is not above the strike price, then no exchange happens, and in both cases, we always get to keep the premium no matter what. The risk in doing this though is that we miss out on any potential upside the stock price may have. If it really appreciates or really does well, the stock price could go a lot higher. In this case, Microsoft at the end of August 20th might be trading for $295, but we're gonna miss out on that $500 gain because we already have that obligation to be selling at $290. And there's always the risk that the stock price could fall, but that's always a risk regardless if options trading is done or not. What's really impressive about Xyld is that it has made monthly dividend payments since the summer of 2013. A lot of these newer income ETFs have only been around for less than 2 years and don't have as impressive of track record as Xyld does. If you wanted to do options trading on your own, you certainly could, but it is very time consuming. Plus there's a lot of technicals and fundamentals you have to look at when seeing if a trade makes sense. It's not as simple as just buying the companies that make up the S&P 500. It also requires a lot of capital because everything is in increments of 100 shares. For example, just one options contract on Amazon would be over $350,000. For just $50 today, we could get exposure to all of Xyld's trades for an expense ratio of just 0.60. That means for every $10,000 invested in XYLD, that would be about $60 every year in fees. Now that's a tad bit on the expensive side, but again, all the work of doing options trading gets taken care of for you. So sometimes it is worth paying up for quality if you think you can't do it better than yourself. Per the fund's prospectus, which goes into much more detail than I could possibly do in this video, and I highly recommend one looks at before investing, the goal of this fund is not to beat the market. Even though Xyld technically owns the market, because of the upside it gives up doing covered calls, it's not going to be able to mimic the S&P 500 returns. We can see in the past 5 years, XYLD is up only around 8% in pure capital appreciation, despite the fact that the S&P 500 is up almost 100% in that same time span. Of course, we do get close to a 10% yield from Xyld each of those years, which definitely does help make up the difference. Really, I'm just going to be putting a lot of my spare money into these income funds to use them as sort of a high interest savings account. Banks aren't paying you anything in interest these days, and the Fed is printing money faster than Sha'Carri Richardson. Just know that these ETFs are typically better for those in the wealth preservation mode of life. Generally those that are a bit older or near retirement, not necessarily those still in the wealth accumulation mode, those who are relatively young like myself. I feel like this infographic does a great job of explaining what our investment returns might be like during each stage of our economic cycle. In bull markets, because Xyld is doing at the money calls just 1 month out, it does that to get the highest possible premiums. In bull markets, the fund will likely underperform because the market gains are basically being capped by doing the options trading strategy. Now in flat markets or bear markets, the fund will actually likely outperform the market because those premiums that we've been selling, that's gonna help keep some of the offsets from the stock price going down. Now Xyld offers no downside protection unlike other income ETFs, so you may temporarily go down with the market. At least 80% of Xyld's assets are in securities at any given time. Now let's take a look at the holdings of XYLD, which again is made up of the S&P 500 index. This includes some of the largest companies in the world in Apple, Microsoft, Amazon, Facebook, Berkshire, JP Morgan Chase, Tesla, Johnson & Johnson. At the end of last year, companies in the S&P 500 ranged from just $4.2 billion in market cap all the way to $2.3 trillion. We also get some great diversification and sector breakdown here, because I'm sure I'm not the only one that's owning way too much technology stocks these days. When analyzing the last 12 months in distributions, we can see that the dividends are really just all over the place, sometimes as low as 22 cents, and then sometimes as high as 48 cents. Just keep that in mind if you're okay with non-predictable payments monthly, but at least there seems to be somewhat of a floor and a ceiling for dividend payments. And that leads us to the inevitable question of taxes. Everyone always wants to know about taxes, but taxes never want to know about you. Luckily, Global X does a great job of giving us tax info. It's actually right here on their website. So if you go to supplemental tax information under fund documents, and we go to the latest month, we can see here that they actually give a very good breakdown of what July's dividend payment looked like. The dividend for this month was 34 cents. Now that was broken into 2 cents coming from their actual investments, including dividends and premiums, while the other 32 cents is actually from ROC, or return of capital. Now people may like ROC because it generally is not taxable and it reduces the original cost basis. When you actually go to sell your shares, you might actually pay higher taxes now, and even those non-ROC distributions, those are likely not qualified dividends. Keep that in mind, as these income to ETFs, they are typically not always the most tax efficient. Now XYLD for the year, 91% of their distributions were from ROC or return of capital, and just 9% of their distributions were from actual investment income. They actually tell us right here in this note that this happens when they distribute more than they make, which certainly does sound like a Ponzi scheme, right? I do want to note, according to their prospectus, they are audited by the second largest audit firm in the world in PricewaterhouseCoopers, or PwC. Now they're going to be checking to make sure that whatever Xyld is telling us is actually happening. They're going to be verifying balances. They're going to be writing their own reports on if they think that Xyld statements are accurate. Also keep in mind that funds like Global X, they are very keen to all the different accounting tricks out there, and they are likely using ROC or return of capital for tax efficiencies, possibly deferring tax liabilities out to the future. We also have direct evidence that Xyld's share price has not fallen in the 8 years of inception, but has actually only grown, and they have continued to pay handsome dividends in all that time. Plus, a Ponzi scheme would be trying to hide that they are just redistributing other people's investments. Xyld tells us each month exactly how much they are paying in dividends and how that is being distributed. That's a really transparent Ponzi scheme if I've ever seen one. For all those reasons, the audits, the strong share price history, the history of distributions, tax advantages, and the transparency that they are showing, I don't think that Xyld, despite its very high dividend yield, is a Ponzi scheme. But I do think it is time to put Xyld on our comparison tracker. So I placed it right next to its brothers in RYLD and QYLD, and right next to its cousins in JEPI and NUSI and Divo. XYLD is now actually the longest serving ETF on this list, as they've been around since June of 2013. That's over 8 years now. Now their 12-month yield is a very impressive 11%. Their assets under management is up to $393 million, but I have a feeling that number will go up after all the free exposure that this video will be giving them. Now, just like all the other Global X ETFs, their expense ratio is 0.60. That's $60 in fees for every $10,000 invested, and they're doing a covered call strategy just like all the other Global X ones. The fund does also collect dividends as a result of holding shares, but that's not explicitly the strategy of this fund, unlike other funds who are really trying that buy and hold strategy to collect dividends. And one of the biggest differences about Xyld is that its holdings are in the S&P 500, while others, they hold onto companies that are in the NASDAQ, the Russell 2000, or they just hold a bunch of selective blue chip companies. I've also added a note at the bottom here, and that's basically stating that some of these ETFs, they're not actually doing options trading on the individual holdings, but instead they're doing it against the index. Now, some people have left me comments and mentioned that to me, but I personally don't think that is too material in our investing decisions, but I did want to leave a note to avoid any confusion. Now, I did update the assets under management for other ETFs. I won't go over those in great detail because I've already made several videos about them, so be sure to check those out on my channel if you want more info. Now, these videos, they do take a lot of time for me to research and edit, and all I ask is if you like this content is to touch that like button and subscribe. If you have any video request of a company or ETF that you want to see me review, please be sure to leave it in the comments below. And in case I don't see you again soon, good afternoon, good evening, and good night.